Good morning, trading world. It is June 6, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. Entering into today's market, please check your preconceived bias at the door. A lot of you probably know that I have a bearish bias toward the entire market right now. But if you want to survive the next few months, please keep your personal bias in check. In order to survive and thrive, you have to come in each day a clean slate and trade what you see. Right now, there is a level of upside potential in the SPY. Let's call it around 421 to the 423 area in the SPY. Also, we have downside risk, which to me is almost unlimited, but let's put a number on it and say 400 to 390 could be the first speed bump, and 327 is the actual area where we could possibly find some support at. So that's going to be the actual risk right now, down to that 327 area. Now you have to ask yourself, are 9 points to the upside worth risking 87 points to the downside? For me, those aren't odds that I like. So I'd rather give and not really take advantage of parts of the upside than trying to play for that upside and end up it flipping all around on me. Now, I'm not giving up completely on the upside. It's just you have to frame this in your mind in order to not have a bias. You have to be completely, like I said, that clean slate and try to trade what you see. Now, I talked a little bit about the volatility box forming, and I said today I was going to talk a little bit more about it or go into a little more deeper explanation on the volatility box. The volatility box is forming, and it pretty much comes from the baton being passed back and forth on higher time frames. Right now, that's the daily, weekly, and monthly time frames. Those higher time frames are all going through a consolidation phase. Remember, in my analogies that I use, as the market being a runner, no runner can run forever. And runners reach these areas where they take a water break and they slow down to a point where they almost run in place while drinking the water when they're in the marathon. Markets do the same thing. But running in place for the market equates to going back and forth across the same range. And with the chopped and scattered order flow, this happens pretty fast. Just look at the last 5 days on the daily chart that I have here. 1, 2, 3, 4, 5. If you notice, we have a pretty definitive range from about 418 down to about 406. So right now, that's our volatility box. Now, to survive and thrive in this environment, first, cut your contract size down to half. We are moving twice the normal distance in half the time, so you don't need to risk as much in order to make the same amount or more. Second, divide the range into thirds and only take positions in the upper and lower thirds. Let me, wrong one. Let me find our volatility box. All right, this is exactly what I said. Take that range, divide it into thirds. We have an upper third and we have a lower third. So now, if you want to go short, only go short up here in the upper third. Now, if you want to go long, only do so from the lower third. It may not guarantee the trade is right, but it puts more odds in your favor to be on the right side. Do not put positions on in the middle third. Doing so is like trying to cross the highway in the middle where vehicles are going 70 miles per hour. It may wear on your patience trying to wait for the upper or lower thirds, but trust me, it is a lot safer. The middle third is like a straightaway on the highway, and the outer thirds are like curves or intersections. Cars don't always slow down going into curves and intersections, but it is the most likely place where they would do so, meaning slow down or stop. The volatility box is a fluid situation. We're going to break out one side or the other at some point. The monthly time frame is in control, but it won't last long throughout the day. It will shuffle back and forth, but I will be focusing on the 4-hour chart for positions. So if you're going to take positions in this, set targets. Get the money off the table fast, because this market will flip around on you fast. So whatever your target is, if I take a position up here and my target is down here, at this point, as soon as it reaches near that target, get that money off the table. Because like I said, it will flip around fast. All right, let me bring up the key levels of the day. All right, here we are with the key levels of the day. Starting on the resistance side, we have our jack resistance 414 to the 415 area. Then we have our queen resistance at the 416 to the 418 area. And then king resistance at 419 to the 424 area. Now on the support side, we have jack support from the 413 to the 412 area. We have queen support from 411 down to the 409 area. And then finally, the king support 408 to the 401 area. The main thesis for today is bearish, closing below the 410.54 with a projected target low of between 411 and 405. Alternate thesis is bullish, closing above the 410.54 with a projected target high between 418 and 424. We have a better chance of repeating this same thesis tomorrow with the bullish side in place. And let me just say, on the weekly standpoint, the weekly bias is bullish, closing above the 410.54 with the retracement of somewhere around 412. We've already surpassed that. So just keep in mind that the weekly bias is bullish. order flow and internals are messed up. There are gaps that need to repair itself, and depending on where we start, we could have more to drop before reversing and going higher today. I know I talked about not going short until the upper third of the vol box, but be patient in the upper third because there is some upside potential today that could break the upper side of the vol box. The current channel we're in is 397 to 416. The next major channel is 416 up to 425. The next minor channel is 414 up to 425. Give me a moment while I bring up the scenarios of the day. All right, here we are with the first scenario of the day. It is our trend day up structure. We open gap up and start to fade back toward the previous close. We find support on or before that previous close, then begin the uptrend for the morning. We find midday chop around either the possible queen or king resistance or vice versa. A special warning for today's trend day up structure. It is very well possible that we have seen most of the uptrend in the overnight session. So a focus on today's trend day is going to be that long journey back to testing the previous close. And if we see upside or go back to that uptrend, it's going to be back to the areas that we came from or the highs of overnight. So just a warning to be careful about today's trend day. All right, here we go with the second scenario of the day. It is our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area and find midday chop around either that queen or king support before spending the same energy we use going down to come back up the second half of the day. All right, our last scenario is our expanded range day structure. We could look to set a decision area low boundary around the jack or queen support before starting to rally for a portion of the day. The only difference in the expanded range day structure is the crossing and closing below the previous close. I just want to stress that part. But again, pay attention to the volatility box that I mentioned earlier. It could really save you on a lot of risk, save you from taking on a lot of risk during today's session and probably the next session as well. So I hope this helps. As always, please understand and know your risk, and wishing you a positive trading day. Have a great one.